All right, stocks sure broke out in a big way today, at least in some areas, not on others. So I'm going to break down like what led this rally today and how significant it is, how meaningful it is in terms of how bullish we expect to be going forward from here. One quick news item before we get going. This will be our last market outlook video. We've noticed the likes that we asked for on the videos and then the social media accounts aren't quite there with the views that we're getting. So we're wondering if that's the feedback we're getting, is that these videos aren't as necessary. So we're going to go ahead and call it quits on these today with today's video. But before we do, let's go ahead and break down what's driving the price action and take a look at one last trade idea. So let's go ahead and get started. Today is Monday, April the 1st, 2019. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, as always, let's start off taking a look at the S&P 500 with the market forecast indicator down here at the bottom. And you can see strong near-term trend. We mentioned yesterday, or Friday, excuse me, that if we didn't really come down, that the near-term line had a good chance of getting strongly into the reversal zone. And it sure did that. I mean, of course, we did not just come down. We actually went higher. Significantly. In fact, we went above that high point, the long upper shadow from that week, which can act as a resistance. Now, it did on the S&P and it did on the Dow big time, but not necessarily yet on the NASDAQ, which had a bigger shadow there, and then not even close really on the Russell 2000. In fact, the Russell 2000 is still trading below its moving average, despite this kind of weak bullish posture. So again, kind of shows some relative weakness in an area that we don't like to see relative weakness when we have a strong bullish trend, especially when we've had a strong bullish trend for going on. Let's see, we crossed over here on the 50 in early mid January, so we're going on 3 months now of close to 3 months of having a bullish posture right here at the start. So not necessarily what we like to see, and of course we are already above that high point. We're pushing up closer to 2,900 now. The posture is bullish. In fact, we may be close actually getting a cluster with all four lines in the upper reversal zone. You notice there with the market sentiment line now getting up there. You can see on the weekly chart we're also getting pretty darn close to a cluster. Still another week, maybe another week from the intermediate line getting up there. And you can see the clusters on the weekly chart here. And of course, we just started a new month. That's always significant. And barring any major moves here, we probably won't get another monthly cluster like we did over here for another month or two. You can see how strongly bullish we are with the near-term line, though, on the monthly chart. So, but going back to the one-year chart again, strong short-term sentiment. Regaining this bullish posture. Still haven't had the intermediate pullback, right? Still haven't got the intermediate line below 50. So similar to this, where you just remember this was a 3 month where we went up above 50 here in July the 6th, and by October the 6th we had that's when we had ended. So that one lasted about 3 months before things fell, and obviously not nearly as strong as this one. We've come up a lot more off of that after that low point than we did off of this low point by the time we got to the end of that run. But you see during that intermediate rally, we had multiple pullbacks, but not an intermediate pullback, right? And not enough of one to get the intermediate line down below 50. And we're seeing something very similar to what's going on right now. And as the intermediate line does drop, it gets a little bit lower. In fact, you notice, similar to this one, we did get a lower dip on the intermediate line. But we got a higher low on the index itself. That eventually played out into a divergence. Same thing here. We got a lower low on the intermediate line. We got a higher low on the index itself, and we'll see if that ends up playing out into a more of a bearish divergence kind of a pattern. Significant for the Dow to not just get above that high point, but also above these February highs. And remember, the S&P is already above those February highs. In fact, during the pullback, we actually stayed above there. And a lot of that was due to the NASDAQ also staying above those February highs during the pullback. The Dow had been weaker and still hadn't gotten above those February high points, but now it has, so a good breakout for the Dow. But like I said, the Russell still lagging behind, not only not above that couple weeks ago high point, but also not even close to getting above those February highs. So it kind of shows how what's leading, right? It had been those FANG stocks. Now it's kind of your large cap tech, large cap industrial companies in the Dow really breaking out. Still not getting that broad participation in this small cap index. All right, before we look at some other charts, just to clarify, yes, today is April Fool's Day, and yes, this is that was an April Fool's joke. We will not. This was not our last Market Outlook video. We'll continue to produce these, but to be sure that you continue to get them, make sure you subscribe to our YouTube channel. Hit that mouse over this logo right here, and then hit that red subscribe button that pops out. There's also a subscribe button down below the video. Click on that. Hit that bell next to it. That will notify you when these videos are posted. Also click the thumbs up icon down there. That tells us that you want us to keep doing these videos day after day. It's a quick way to give us feedback. That's the only way we can get your feedback, so make sure you click on that if you like these videos. And also down at the bottom, comment on anything that stood out to you from today's videos. Join our daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Very easy way to subscribe to that up there. Follow me on Twitter for more content in between these videos from day to day. And join our Market Outlook community that we created on Facebook. All right, as you look at our blog, the video on our blog, you can see we got our calendar posted for April. So our next few classes, there's my next two classes on options strategies and options inventory trading, and Brandon's very popular DGI class, probably our most popular class that we have here. So there's the calendar. Again, if you click on View More, it takes you to our full calendar. You can mouse over any of these to see what we talked about. You can mouse over the recordings to see what we covered in prior classes, going all the way back to last year, actually, because we've now been doing this for a year here. Also, you can see right below the videos an easy way to subscribe to our email, our daily Market Outlook email. Just fill that out and hit that button. Again, it's right below the video. Here's the email. You see the timestamp summaries. You can click on these links. At the bottom is our watch lists that we send out every day. So make sure you scroll down to the bottom to get those lists. And then finally, there's a link right above the video to participate in our forums. You have to subscribe. If you come here to this button where it says subscribe in red, click on that image. It takes you to this page. You see how really easy it is to subscribe. You can do it for free when you do that. So that will allow you to participate in our forums, our Market Outlook forums. Not our classes. Those are for our premium subscribers. But for our Market Outlook forum, you can participate there for free. All right, let's get back to the charts, and let's take a look at the long-term view and what the candle looks like. So there's that breakout above the high point. So now again, it's by the end of the period. So we only have one day in this period. We'll see if that resistance holds by the end of the week. A strong start so far. Also a strong start to its Hakunashi candle. So look at another bullish candle there. And it's going to be very hard for us to get, you'll see here in a second, very hard to get a lower shadow. Not impossible, but it's going to be harder to get a lower shadow. So good, and another good bullish candle. Still, no transition here. And it's one thing to get, this kind of long. See, this was look how weak we were on this trend, and then it just exploded to the upside, and that's why we had such a sell-off here. And this was more normal, but you see how we just continued higher and higher and higher. But look how big these candles are, relatively speaking, to some of these others. Again, when we get these kind of big-sized candles over and over again, that usually leads to increased volatility, both to the upside, like as we're getting, and eventually back to the downside. So a little concern there. You can see it's not the same thing that we're seeing on some of these others. The Russell 2000 actually has been showing these bearish candles and a little bit more of a transition, a bullish candle here to so far this week, but again, about as weak as you can possibly have it. Let's go back to the regular candlestick for the Russell. You can see we still haven't had the golden cross yet, and we're still not above these highs that we are above on the other indexes, like you can see the Dow Jones Industrial Average and the NASDAQ Composite. Look how bullish, but still, again, that's going to act as a resistance. We'll see how much of a resistance that will act as by the time we finish off this week, how strong that ends up being, and whether or not we end up closing up above it. Let's take a look at the 3 green arrow chart for the S&P 500, and we've got a renewed 3 green arrow signal above a rising moving average. That's bullish. And then when you look at when you break them down, we're above the 8 and 17 are still above the 30. We're above all three. They're all three rising. The MACD is rising above its moving average. Stochastic's rising above its moving average, both in the upper half of their charts. So from this chart, about as bullish as we could possibly be. The problem with the MACD is, usually when you get the strong surge in momentum, we don't, come down and back up with another strong surge in momentum and then come down another, we typically have the strong surge in momentum, and then we have peaks and valleys, but the peaks get progressively smaller as we move towards zero, right? As these lines, converge on each other. So keep that in mind when you get this kind of breakout move. Usually it doesn't lead to another move like this. In fact, it's kind of hard for it to. It's not impossible, but a lot of times you might get something like this where it's like, whoa, blow off, and then it only lasts a couple of days before we move back down and we continue the grind towards zero, like it did after this first initial momentum surge that we had off that intermediate low point. From an intraday perspective, you can see we rallied up to a new 4-week high point, and that we have a 14-point range here, so we're still at that 5%. And we now have we hadn't reached it before. Now we have reached that 5% threshold where it's not quite 14 points, but right there. So it's just a smidgen below, but we're pretty much rounding up to that 5% mark. That's a pretty wide range for a bullish move, right? Usually when you're dropping, the range can drop as we push the lower bands down. The range can drop to about a 10% gap. But as you move up higher and you get towards the end of an extended move to the upside, an intermediate run, 5% is the mark that we look for, and then we start to really grind towards nothing. And it doesn't mean that we're going to sell off sharply. It just means that it's hard to keep pushing, right? We still got about this will stay down here for another week, but after this week, this low point will move up right to there, and then it'll move up to these lows, and it will stay there for a while. So you can see the range, unless we really start pushing to the upside, the range will really shrink up pretty significantly, and then that's usually when things start to slow down. Again, maybe not reverse sharply, but at least slow down. Let's take a look at the volume and the trading range today on this little breakout move that we've had. Now keep in mind we had a little bit of a gap, a couple days in a row of a gap that held to the upside. You can see that we closed at 282.5. We opened up today, or the low point was 284.5, so about a 2-point gap. So you look at that, it's a 3 3/4 point move, and you include the overnight trading. That's above average, 3 3/4. The volume there at 77 million was right at average. So 3 3/4 is right there. That's, again, it's not bullish to get these big ranges, to move this line higher, and this volume's not really moving higher either. So we're not too concerned about big bearish drops, but again, just like we saw here, that big bullish move didn't lead to more big bullish moves like you see coming off of lows. It actually led to some volatility, and the same thing, it doesn't look as big because it didn't open down here, but like it did here where we opened lower and then moved higher. But when you look at the overnight trading, it is very similar to that size move. So not as big, but big comparatively. And we'll see if that ends up leading to some volatility here by the end of the week or not. And then finally, looking at the VIX, the VIX has dropped all the way back down again. So a little bit of a jump up towards 17.5, and just like that, dropping sharply, but not, again, kind of to those low points that we had over here. But a higher low on an absolute basis, slightly higher low here. So into that bullish territory, gapping down into the last couple of days into this bullish here below 90%, but still not quite getting into the lower half where we kind of fluctuate around this 85. We're still kind of the low points of volatility is in the upper half of the bullish zone. So we're bullish. The trend's obviously bullish, but still not breaking down below that 85% level yet, where we just kind of grind. That's when we get in there, we start moving higher, and we just grind every day, just a little bit higher, and it seems like every day it goes up, but not with moves like we saw today, but with this little slow, boring moves. So for those of you buying calls, it ends up like you're watching paint dry. It's hard to make money in those kinds of environments. That's what happens when the VIX to VXV gets down into this area, and when it trades in both halves, but especially into the lower half of this bullish territory. All right, so what do you think about our market outlook? There's a link popping out in the top right corner of your screen. Click on that link. It opens up a poll to where you can either hit agree or disagree If you disagree with today's market outlook that we've gone through with our routine here, that's okay. Let us know in the comment section down below. What are you seeing that would suggest either that we are far more bullish than any expected pullback may suggest, or that you think that we're not just going to get a pullback, that we are going to end up tanking here. So let us know what you're seeing, or what you're seeing on any charts, or what other factors, macro, micro, that would lead you to that particular conclusion. All right, let's take a look at now what's driving the price action today. And we have a busy week this week in terms of economic indicators, especially with the jobs report due at the end of the week. You got durable goods tomorrow, and you had the ISM today. And we actually had retail sales, ISM, and construction spending. If you take a look at retail sales, I mean, all of them were positive, right? That's a lot of people are saying, hey, these are really good numbers, like especially when you dig into the retail sales. It doesn't look good on the headline basis, but when you dig into this, it looks good. But if you look at the year-over-year figures, that's the one that I really care about the most. And you see how we continue to trend lower. And you notice how on ISM, we jumped up on ISM. That got a lot of pub today. But you notice, yeah, we bounced up, but we're still continuing to trend lower. And then you look at construction spending, which also got a little bit of headlines here with being being better than expected, right? The expectations were for a small number, and you notice the year over year dropping down from 2.4%. So we had a little bit of a bounce up here, and you see how the trend continues to move lower. So and you see when you look at the economic surprise index, which is a rolling window of 3 months of economic indicators, despite today's moves, we're still very negative. Now, it hasn't stopped the GDP estimates from raising. You notice they jumped all the way up to 2.1%. They started off this cycle at 0.5 and actually got below 0.5. So it's a very, very big jump in estimates and GDP estimates here. And you see that actually raised interest rate hold expectations, right? It lowered the cut expectations, not for one cut, but for the multiple cuts, right? So now we've gone pretty much from what was close to 70% odds here about a week ago to now 60% odds that we'll get at least one rate cut. So high probability, but not as high. It's when this gets below 20, then we're pretty much baking in the cake, a rate cut by the end of the year. So we're not quite there yet, even though we are approaching it. But it's interesting to see, from an economic, how bullish we were today. But really, the thing that really led risk appetite higher was crude oil, and it continues. When we have decent runs in stocks, it's crude oil that leads us higher. You see that small cap stocks lagging behind. Agricultural commodities did very well. Gold was down with the flat dollar. Preferred stocks is barely above break even, and long-term bonds finally giving up some of their gains. If you take a look at let's take a look at crude oil. You see how bullish that chart is, and a little bit of a breakout today up above $60 there, getting into the past the 50% level of this Fibonacci retracement zone. So strong bullish posture, and you look at the 10-year note, and you can see it's also bouncing sharply off of what is an extreme low. Now, see, we can bounce sharply off extreme lows and not change the trend. That's the key. So we're going to keep an eye on this 10-year note coming off of extremely low levels. We talked about that idea that it would be coming off these clusters, which typically leads to bullishness. So we're going to see if it leads to a trend, like it did eventually here, or whether it just leads to coming back to the moving average, where there's going to be some resistance at this 2.75 area. In the classes, in our portfolio management classes, we talked about that possibility of us getting up to 2.75 with the divergence that we see on some oscillators, and that's going to be resistance. And so as of right now, it looks like we may be appearing to head that direction, especially with how aggressive today's move has been. It also will help with that yield curve, which again, as much publicity as it gets, is still not below zero. The 10-year is still not below the 2-year. The 10-year is below the 3-month, right? We do have that inversion, and the 2-year is also below the 3-month. So both of them are below the 3-month, but the 10-year is still not below the 2-year. And again, that hasn't happened since like 2007, at the end of the yield curve situation that we had back here. Is right towards this time frame that we finally had that kind of inversion, where the 2 and the 10 both dropped below the 3-month, but not the 10 did not drop yet below the 2 years, kind of in this time frame. So we'll kind of keep our eyes on that and see what that means in terms of our expectations going forward. Of course, it's the jump in yield spread that's bearish for stocks. Until we get that jump, which would mean the Fed's dropping rates, and again, we'll see that Fed dropping rate show up in this number here, getting at least down to 20%. So it's not yet, even for January 2020, which is all we got futures data for, still not there. So we still don't have it baked in yet for any date going forward of a rate cut, despite the high probability that we're getting. We're getting there, but we're not quite there. Once we do get there, then you'll see these short-term rates start to fall, like the 3-month yield and the 6-month yield and the 1-year yield. That will mean the yield spread will start to rise. That will be the bearish indicator for stocks that traditionally hasn't been so good. Like stock performance hasn't been so good from that particular point in time. Let's take a look how the sectors performed today. We'll go to the sector chart over here. You can see financials with the bouncing yields were the biggest performers to the best performers to the upside, and that's not surprising, right? They were the biggest losers during any kind of decline because of that yield curve. You see how they're coming up off of much sharper lows, so they got a lot to give back. Whereas on the other end of the spectrum, these consumer stocks, discretionary and staples, which had been better performers, they're pulling back more. So FANG stocks doing well, XLK, XLC going up there, and with that dollar being relatively weak, you have some of these dollar sensitive areas doing well. They've been laggards too, right? Over the long term, they've been the biggest losers, energy, materials, and industrials. So we do get this kind of more extended move, which I expect actually into the end of the year. There is a good chance that those dollar sensitive areas could perform better, assuming the dollar doesn't break out here, right? That's been the key issue, is this dollar move, assuming this resistance holds and we roll over. Otherwise, if we break out above 98, energy, materials, and industrials are not going to be the leaders. It's going to be technology, communication services, those FANG type stocks, consumer type stocks, right? Those will lead our way higher with interest rate sensitive areas and dollar sensitive areas lagging behind. All right, one stock that's doing really well today, kind of a little bit of a breakout move, is Las Vegas Sands. Look at that. You got the strong green posture. You got the moving average rising because we're easily up above it. In fact, we're kind of significantly above it here. That's a nice breakout move up above these highs. If you take a look at the 3 green arrows to see if we can confirm that move with 3 green arrows, and you notice we do have 3 green arrows. So 1, 2, 3. And when you break those down and look at them on a individual line basis, you can see the 8 and 17 are starting to cross up above the 30. The MACD is crossing above 0 and pretty sharply above 0. Stochastics easily above 50. So very bullish type moves. You look at the Bollinger Bands for Las Vegas Sands, and you see how we're breaking up to 4-week highs. We're breaking up well up above the upper Bollinger Band. We're breaking through all this volume here that we had accumulated. So we have a pretty decent opportunity for a decent run in this stock. Again, you go back to this 2017 time frame where again the markets are bullish and it was led higher by international stocks, and Las Vegas Sands did very well in that environment all the way up through the beginning of 2018 and even higher. So if we end up in a similar situation with some bullishness led by international stocks, and weakness in the dollar, traditionally that has been bullish for a stock like this. So let's take a look at the long-term chart for Las Vegas, and you can see getting close to what would be a golden cross. Obviously, you're getting above the 50 and the 200-day moving averages, so strong pattern. The DMI indicators is also something we take a look at here on occasion as well. You see that also showing bullish patterns, breaking above 25 and crossing below 20, and you can see the ADX has a long room to run for a trend to develop and even get above 20, much less get up towards here, which would signify a strong trend. In fact, you take a look at the trend strength indicators for a stock like this, and you notice, we're getting close to having a weak bullish trend on a weekly chart, and you look at the daily chart, same thing, right? So we have opportunity for a new trend to develop here and for us to be bullish for a while. So how can we trade it? Well, again, we typically look at trading short put verticals, but this stock is relatively cheap and its options are relatively cheap. So here's an opportunity where we can say, we do have earnings coming up. That's going to be a risk factor for the stock, right? If you look at, if we add this price expansion over to the right, we do have earnings coming out after April expiration. How bullish that's going to be, of course, we don't know. Let's go back to this chart here. So last April, you can kind of see what happened here. You can kind of see what happened here on the earnings. What didn't really move the markets too much, and we had a bullish move coming out of it. So whether that ends up being the case or not, but the technicals would suggest that we should have this kind of a move going into and out of the earnings release. So we can say, okay, I can buy an option. It's only $300. In fact, I can position size around that whole thing, or I can come down here and buy this out of the money May option, or actually go a little bit further. We'll go to June. Buy this out of the money 65 option for $235. Put the whole thing at risk, knowing that if the earnings come out, I'll lose. At the worst thing I can do is lose $235. But if we continue higher, and you notice we're almost at 65, if we push up to 70, 75, 80, and you notice here, if I were to, let's go to single symbol, and let's take a look. This is by June expiration. So at current volatility levels, we can move up towards $70, $71 with one standard deviation. That's a 6. That's into this area. That'd be a pretty decent run for again $200 of risk. And again, we don't have to. We can put half of that at risk, knowing that it's the delta is smaller. So if the stock does pull back pretty sharply, the delta is already small, and as it pulls back, you notice it just gets smaller. So it'll be really hard to get up to full maximum loss on this, and that's until we get to expiration, much less even half. So even if risking most likely risking about half of this for this to really, because we'd have to drop below, let's say we drop down to 57.5. Well, if you look at the option here, and we analyze this option, if we drop down to 57.5, right now we're going to lose 170 out of that $230. So that kind of a run up here for a $450 gain out of a $170 loss, that's a pretty decent reward to risk ratio over the next few months in a stock that looks like it might be breaking out into more of a trending move. Obviously, it won't go up every single day, but if it breaks out into a trending move, here's an opportunity we can trade that with an out-of-the-money option. Now we can roll over if we want to keep it going if it continues to trend. Otherwise, if it just makes it up to where we think it will, or where it can at current volatility levels, we can get a decent reward to risk ratio out of it. All right, so that does it for me. Now I want to hear from you. There's that link that's popping out to go to our forums, open up any new thread, any questions or comments you have about today's trade idea or anything we talked about in our market outlook video today. Go ahead and shoot me and open up a thread there, or any comment or discussion point that you want to start with other market scholars. Remember, you can also apply to other people's threads too. As you see in those forums, you have to subscribe, but you can be able to participate there for free. As always, thank you very, very much for watching. Remember, this is not our last video. That was just a April Fool's joke. We'll be back here tomorrow. Brandon will be back on tomorrow. So have a great rest of your evening, everybody. Remember to subscribe to our YouTube channel, hit that thumbs up icon, and comment down below. Follow us on Twitter for more content, and join our communities on marketscholars.com, as well as the one that we created on Facebook. Have a great night, everybody. We'll see you all tomorrow.